One of the reasons you are not making it to the 70% plus win rate is because you are joining a tired trend. Okay, from Binary Winners Club, this is Bernard presenting to you how to predict the end of a trend very easily, so that you don't join a tired trend when momentum is off. That is important for you as a trader. You wouldn't want to enter a trade in the direction of a trend only to see the market go the opposite way. Would you? Okay, so we proceed. This is USD CAD on M5 time frame. This is today's market. It is 18th of February 2020, and I'm going to the beginning of the day today. On M5 USD CAD, I only have a few things on my chart. I have a moving average 10, I have another moving average 20, and I have zigzag indicator, this one, and I have my own custom support and resistance indicator, which you can still get and customize if you so want. Of course, this is not critical to the analysis. Now I would like you to watch this very carefully, because I will show you a tip that can help you avoid some of those losing trades. Follow me. Starting the beginning of the day, you can see the market was moving up. We are using these moving lines. The green above the red meaning an uptrend, the green below the red meaning a downtrend. Basic way, we know these indicators lag, yes, but they can help you visualize how the market is moving. So going forward, what you notice is from this point, from the beginning of the day, we had a very tight range here. You would barely tell whether we are in an uptrend or a downtrend. The lines were flat. They started separating from somewhere here, and that tells you that the momentum is, increasing upwards. They diverged. The green is going up, not really diverging, but they started separating. So this one, the green was moving faster upwards. The red was accompanying that, but much more slowly, a sign of increasing momentum. Now, I have added this zigzag indicator here. Let me show you how you will use this indicator. This is a peak, the high. This is another high. This is another high. And this is another high. What do you notice? This is a lower high, a higher high, another higher high, another higher high. We have a lower low here, a higher low, another higher low, another higher low, and that confirms an uptrend, guys. Now, if I were to trade a pullback from this point, we break resistance, we go up, we come back to this level. Why would I be interested in taking a trade at this level? Perhaps because this is a higher high than the previous swing. So we took this pullback. Okay, we took this pullback here, maybe if your strategy told you to do so, and you carried on. Then price moves up, makes another swing, comes back below to this level. Now I don't have a support level, so I will not be possibly interested in taking a trade, but as you can see, we have a level here. We have a level somewhere here, and you would have considered taking a trade here. Resistance, support. And so if you were keen price action student, you would have taken another setup here to the upside. But now things start changing from here. We still have another level here, as you can see. You still have another level here. This is a resistance that should be acting as support, which is okay. So market breaks that level, doesn't even go far, immediately comes back. a signal that price is not going to go above here. Perhaps. You see, look at this. When price broke above here, see how many candles were above this level? Many. Telling you there was a significant move. It was not a fake out. See here, strong break to the upside, several candles above it, then we come back to the level, indicating it was a serious break. But look at this, we break just like 1-2 candles, we are back to the same level, more or less. And the price is just playing a game around it. But let's just say, for the sake of argument, you took a setup around here as well. So you lost this, okay? Now, what happens next? This is what happens next. Now from here, you decide to say, okay, we will continue pushing this market. What did you notice? So after you entered this setup here, this one, after you entered a call or a higher here, price chose to go down instead, decided to go this other direction. But maybe you had another level and you felt like I wanted to trade. So you would see another support level here. You see that? There's another support level here. So you said if this one fails, I can take the market at the next support level. Which makes sense because the lines are still showing an uptrend. But one thing you need to notice is price broke this level and has come all the way to another level. It ranged a little bit here and it never went back to resistance. That should tell you the trend is most likely changing direction. Let's assume you didn't see that. And so you carried on. Now, at this point, it would only be foolish to take a setup here. It would be foolish to take a setup here. For one, although you see a support level here, okay, and along the way the lines were showing an uptrend more or less, but now remember they are pointing down. Okay, momentum has decreased significantly. There is one reason why you should not think of taking a setup in this place. One is you need to consider this, that this swing you see here, this one, the swing point here is lower than the previous swing point. So we are no longer dealing with higher high, and a higher low, right? Now, this is a lower high, lower than this. Surely, if that is the high that was made and is lower than this, why would you want to take a setup here? Why would you want to take a call or a long? You don't do that. Let's carry on. So price plays around. So this is a downtrend. And one thing you notice, we have this low. Okay. We have that low. Let me now interpret this as well. We have a low point here. This is the swing low. The trend is down. Price is coming back to this level. Okay. And so you would have considered potentially taking a put or a down setup here, which is okay. But now look at the next swing point. This is the point. Look at the next swing point before price goes back to the other point above. You notice one thing, this swing is no longer a swing low. It's not lower than this. This one was lower than this, but this is not lower than this. Potentially indicating the market is shifting direction. And as you can see, even the moving lines have already crossed, indicating we are likely to begin an uptrend. And so, it is not good advice to enter a trade here. It's not good advice to enter a trade here. As a matter of fact, let's assume you entered a put for 5 minutes. 1, 2, 3, 4, or for 5 candles. 1, 2, 3, 4, 5. That's a losing one. 30 minutes, still a losing one. All right. Now, the moving lines are telling you up. The swings are also telling you the market is now moving up. Let's continue. What you notice next is this is a new swing and this is another swing. This swing is higher than this. The high of this is higher than the high of this. So price breaks above it, makes another high here. Watch closely. All right. So at this point, price comes back to this level. Apparently, I don't have a support level here I can associate with. So I just don't take any trade. The market makes a higher low here, then goes back and makes another swing before returning here. What did you notice? This swing high is now lower than the previous swing high. Whenever you see that, start thinking, downtrend coming, most likely. What did you notice? The market comes back to your support. Even though the lines are telling you it's an uptrend, look at these swing points. They are telling you the market could not push above this level. Momentum is over. The market is tired, so to speak. And so you don't take a trade here just because it has come back to your support level. You don't. Sometimes it may work, because especially when you are entering a ranging market, which you can't tell in advance, but don't risk taking a trade here. You risk the market doing exactly what it has done here. You enter for high, it immediately goes down. Let's keep following. So we start moving to the other side. Okay, forget about these things. Okay, forget about this. Maybe you can keep that. So we are here. The market went down. Now, what did you notice, guys? The market makes a swing low, lower than this, potentially telling you what? This low is lower than this. Now, that tells you the market is beginning to move down. And so in that case, when you see that the previous swing low can easily become a resistance when the market goes back up to the same level. And that's exactly what happened here. The market went back to the same level, okay? And you would have entered that trade. Do remember, the moving averages are now telling you up. But remember, moving averages are what? Lagging indicators. They are slow to react. So if you are a keen price action trader, you would have known that we are now going down somehow. But if you are still depending on moving averages, you would still be waiting for something else to happen. But at least not to take calls. Here confirms a down move. Now, what did you notice after entering this trade? Of course, price goes nice. What next? What you notice happening there is price simply comes back to the same spot for the previous. Same spot. Telling you the market is really not keen on pushing below that point. That's an indication that for sure the market may not be moving down any further. And so when you see this happening, don't expect to enter another trade at resistance unless you have a problem. You don't do that. Because now that confirms, it's a double bottom, you might call it. That confirms the market is actually possibly moving up instead. And so if you enter there, you lose. But now you know you should not be entering there. Keeping on with the analysis. So the market moves up. The next thing you notice, we have a new swing high. That's the purpose of the zigzag indicator if you can't use it. I can use the zigzag or I can use my support and resistance levels. They do exactly the same thing. So we have a swing high here. This high is higher than this. Now with that confirmation and the fact the moving averages have crossed over, I am sure I am now in an uptrend. Whether it's a short-term uptrend or a long-term uptrend, it is still an uptrend. Okay? So if price came back to this level, I would consider taking a trade. This level. So we see market pushing up to this level. Okay? And pulls back down. Now, do I have a level around here? If you are a keen student, you will see we had a level already. From here. The swing, the previous swing. And so, this would have been a nice spot for you to enter trade. Okay? And of course, for 5 candles or 3 candles, that would have been profitable for you. Now, what I'm interested in is for you to notice when you should not enter another trade. So you enter this, you win. The next thing you notice is the market just reaches below the previous swing high and stops. Comes back to support. Now, when you see this happening, that the highest it went was lower than the previous high, think downtrend beginning. And so, don't take another call. Don't take a trade to the upside. Guys, you are listening, I hope. Are you listening? Let me give you a break. Enough break for you guys. We are back to the charts. So our analysis stops here. So we take a break now here and scroll the charts to the right. We will notice that we were here. Let's go back to our swings. So we had this swing, we had another swing, we had taken this trade, we didn't take this because now this is lower than this, confirming possibly moving downwards. Now when you see that happens and we break the support level and we go that distance, even breaking up another support and another resistance, that tells you the market is moving downwards. Start thinking selling, selling, or put. So what did you notice? We had a swing low here. The market goes back and makes another swing low. When you see two swing lows, one lower than another, think downtrend. And so the previous swing high, I showed you this, the previous swing low becomes resistance. The market does its thing, comes back to the same spot. And so if you are a keen student, there you go. Another trade to the downside, which would have won easily. The next thing you notice is now after this, the market goes down and makes another low. Okay? This low is low. It actually broke this level, but you see, it didn't even trade below the level. Really. Okay? But we are still in a downtrend because at least we have a lower price than this. And so you are still thinking sell, 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 or put. So then the market makes another swing here. I don't seem to see a nice support or resistance from the previous market unless I were to extend this level, in which case then I would have considered that. Otherwise, I'm not so keen about, I don't think that's a good level so far. So market makes a swing. This one is lower than this. Okay, it's lower than this, confirming we are still trending down. We move on. What do you notice happening next? Market proceeds. It makes another swing low here, lower than this. But do you think it's really lower than? All the candles are really merely touching support. Touching support, touching support. When you connect these two lines. Another potential for a double bottom. When you see price touching the same level and moving back up, don't trust that trend. The trend is likely to reverse. And so, I will wait for price. If you ask me what I'll do, I'll wait for price to break above this level. Okay? Go up, then go down. Then I'll start thinking, up from here, buying or taking a call. So I believe, short as the video may be, it was informative, it was educative for you, and that's how you can eliminate unnecessary losses from your trading account. Remember, think higher high and higher low as uptrend, lower high and lower low as downtrend. When that pattern changes, things are going crazy. Look, and it's very visual. That's why you might need this zigzag indicator. This is lower, higher, higher, but the next one is lower. So when you see this, don't think of taking a trade at support. The trend is changing. Again, let me see whether I can show you with another chart, maybe Euro USD, our common pair. Let's just spot. I'm not going to draw anything now, but we want to spot some of these cases for like a few more minutes today. Look at this level. High. The next one, nearly high, but it's not as high. The next thing you see, support did not hold. Price broke right below it and proceeded. Look at this swing low. The next is a higher swing low. It didn't continue down. The next thing you see is resistance was broken and price went up instead. What did you notice here? We have a swing high. The next one, another swing high. What did you notice? Support did not hold. Broke it and the market started playing around that level. Then we have a higher here, a higher price here, and slightly a higher price here. But to me, this and this are the same. And so I cannot trade support like here. You see it broke and went down straight away because this is a double top. Now we have another. So these are low, another lower, another lower, and another lower down here. The next thing you notice is the next low. Where is it? The next low, current, where is it? It's now higher than this. Are you thinking of going down yet? Don't do that. All right. I think that helps you guys at least to know how to face the markets. Yeah. This and this double top, don't consider taking at support. And then you notice the next swing is even lower than this, meaning there's a potential downtrend building. But then the next swing from here goes above this, confirming we are likely to move up now instead, because these are higher than this. So when price comes back to your support level, okay, especially this one, because that's where the swing started from, and this is the candle, you are likely to consider taking it up. Then this one tops here, again, switches. So remember, broken support can become resistance like here. This is broken support. If you extend it, the market went back to the exact same spot. So again, it's important for you to notice that, like here, this broken support, the market went, then reversed from there somewhat. The key thing is focus on the higher highs and higher lows. Okay? You focus on those, your account is going to enjoy ITMs. Bye bye guys. See you in the next video.